SA retail sales numbers came out today, and many South African retailers have released trading updates. Annabel Bishop is in studio with us to explore all things retail. So let's get a sense of what this 2.6% uptick that we saw in the index actually means for the state of the economy, but also the state of the consumer.
Sure. 2.6% is quite modest growth. It's not strong growth, and indeed it's actually well down on the figure recorded for November in 2013. That was closer to 4%. So it does show that the consumer is in a worse position essentially than it was in 2013. I think you can look at the whole year of 2014, because remember this is November 2014's print. Compared to the whole year of 2013, we had higher interest rates last year, and obviously real disposable income growth continued its downward trend. Employment prospects were quite weak, and households of course are highly indebted, and of course that is a concern.
Annabel, you've got a tough job. You've revised, I noticed, your CPI forecast for 2015 down from 5.1% to 4.6%. But on the other hand, the people in more senior public positions than you must have an even tougher job. Because on the one hand, we've got the market's giving. They're giving us something with the oil price coming down. On the other hand, the market is taking away from us by the commodity route. So we've got less revenue coming in because the commodity prices have fallen. How tough a job is it now for the Ministry of Finance and also the South African Reserve Bank?
Well, I think the South African Reserve Bank has had a bit of a bonanza with the falling oil price, because the petrol price is likely to fall by probably 3.5 rand if you take in the cut that's expected for February. So that's quite a significant decrease, and obviously that will push inflation forecast down. So I think it gives the Reserve Bank a lot of leeway to avoid having to hike interest rates too much this year. Indeed, the FRA curve, the forward rate agreement curve, is looking for a 1% raise in interest rates this year, and I think the expectation certainly is for less than that. We're looking for only a 25 basis point increase, so that's obviously quite supportive for the economy. I don't think that's fully factored into the markets yet, so that is some positive news. In terms of the finance minister, you know, the concern certainly is that we've had more than a 50% fall in oil price, and that hasn't translated through clearly into the petrol price. But about 50% of the petrol price is indeed levies, contributions to the RAF fund, it's margins on wholesalers, retailers. So really, you know, only half the petrol price we pay at the pump is indeed the international rand value of the petroleum price. So from that point of view, you know, we may find some clawback from the minister come the budget on the 25th of February. He may decide to perhaps raise the fuel levy by possibly a rand to increase the central tax pot. But obviously it's difficult. It's going to be difficult for him to increase it by more than that.
Annabel, we had some statements today. Massmart came out, and ShopRite. The inflation numbers that Massmart are experiencing are about 5% overall. They've been gradually easing up over the last year. But from what you're indicating, perhaps, we could be looking at a peaking out, and that retail inflation could be coming down through 2015.
Yes, I think quite an important point. If oil prices don't rise from where they are, you know, international petroleum price, if they remain modest, we don't see a rand blowout. In fact, that's actually going to contribute to dampening the inflation rate of food. So we could get some food price disinflation. That'll obviously happen to other commodities as well that are sold at the retail level, other goods and service, other goods that are transported through the country. So I think positively we have some positive news to look forward to. Clearly consumers can gain as well as their cost of transportation comes off, not perhaps for the low income earners that use the minibus taxis, because those fares tend to stay quite stable for individuals using their own form of transport. But of course, as I said, food prices coming off, paraffin prices coming off, those will be quite positive.
I just want to link this conversation back to the conversation we had earlier with Tembani. Did we find a pattern that would suggest that retail sales could have been stronger had Eskom had its story together over the last 3 months? In essence, has Eskom eroded some of the retail sales growth that we could have seen as a country?
I suppose you can always argue that people could have shopped more if the lights hadn't gone out in the store they were in, if they hadn't been able to swipe their cards, make the payments. But I think typically if you have to make a purchase, you'll probably go back and do it again. So maybe it's, I think, more pertinent to the manufacturing industry. Certainly would have some impact, but it's more pertinent, I think, to the manufacturing industry. You know, producers in South Africa being told to cut back by 10% more under the power conservation program. That's really worrying for me, because that's where our fundamental economic growth comes from, you know, our better quality of employment. But of course, you know, power generation cuts, the utility being unable to provide sufficient electricity for the growth in the economy, it's not a positive story.
Not a positive story, and we ended on that note with Annabel Bishop, who is Chief Economist at Invest.